Hey everyone, happy Wednesday. Hope your week's going well and hope you had a wonderful day. We have a great stream tonight for you guys. And you'll probably notice that we're on at a slightly different time. Normally we're streaming around 6:30 p.m. Today we're streaming at 5 o'clock. And it's really simple reason. I'm a baseball fan. We got Game 5 of the World Series, Yankees-Dodgers tonight. And quite frankly, I want to watch it. So, and I didn't want to compete with the Yankees-Dodgers games for ratings and views. So we're streaming a little bit on the earlier side tonight, but I'm glad that y'all can be here and I'm glad that you could join for the stream. We're talking about tonight, boy, wow, it's not the most joyful topic, but we're talking about how the U.S. is basically on the verge of an extremely vicious housing cycle. And that's actually according to the head of the mortgage division for Lennar Home Building. So not necessarily my words exactly, although I don't think I would disagree with the words that are coming from the author in the article. But we're going to be talking about this vicious cycle that the U.S. is on the verge of, and it has to do with basically the same problem that we've been facing for some time now, and that's the affordability crunch, right? And less and less and fewer Americans are in the position where they can afford to buy a home. And that is not good. We have to remember that, the U.S. economy is extremely complex and there's a lot of moving parts. But one of the biggest drivers of the overall success of the United States economy and the U.S. GDP is real estate. People don't realize that when real estate doesn't turn over, when houses aren't transferring, when they're not going from one person or one family to the next person, the next family, that really, really hurts the entire U.S. economy as a whole. Obviously, when houses don't sell, everybody's first thought is, of course, Joe, you're going to be biased. You're a realtor. Of course, you want houses to sell. And yeah, I would be lying if I told you I didn't want to have houses to sell to people. But it goes deeper than just that. So yeah, of course, your realtors and your lenders and your mortgage companies and your escrow companies are going to have a hard time when properties aren't transferring. But you also have to think about too, like your contractors, your handymen, your plumbers, your roofers, your housekeepers, all of these different people, Home Depot, Lowe's, people that work at Home Depot and Lowe's, all of these people are kind of depending on people owning a home and being able to afford that home. And right now we're in a spot where it's a little precarious, and we've been there for a while. But what we're seeing now is, how long is this going to last? And are we going to be in this? Are we at the start of this new age cycle of real estate? We all kind of thought, well, first it was COVID. Now COVID years, it was an anomaly. And then it was like, oh, well, because interest rates were so freaking low, so people could buy houses and bid the price up. And then it was like, there's not enough people selling their homes and the inventory is low and it's driving the price up. Oh, and then interest rates shot up. Thanks, Jerome Powell and the Fed. Now people don't want to buy and sell homes because interest rates are too high. And then it's because it's an election year and there's an election and people are uncertain. And all of these things are viable reasons on why people may or may not move, or at least re-examine their moves right now. But now the concern is, are we settling into a new normal? Are we getting into a new housing market routine, which would not be good for home buyers? So as always, guys, thanks for joining the stream. We're about to jump into the first article from Market Watch, which is a great source that I really like. If you're live with me watching the stream, thanks for being here. I appreciate you taking some valuable time out of your day. And if you wouldn't mind, hit a thumbs up, like the stream below. It helps me out, doesn't cost any money. And also consider subscribing if you want to watch future videos. And additionally, I want to know where you're watching from. So post in the comments, let me know where you're watching from. Obviously, you don't have to give me like your exact address, but just give me state and city, or city and state rather, of where you're watching. And I'd love to know what's going on. And at any time, if you guys have questions or comments about the article that we're going over, or if you just have general real estate questions, you need some advice, or you have a scenario or situation and you want to see what my thoughts are, pop it into the comments. And I'm always happy to talk about real estate and try to solve your problems, right? So let's get into the very first article from Market Watch. Oh, and now it's telling me that I have to pay. I don't want to pay. There we go. So let me make this a little bit bigger so everybody out there can see it. There we go. Much better, much better. Okay, so this comes from Market Watch, and this is just a couple days ago. Actually, just yesterday. This article, it was updated. It came out 2 days prior to that. U.S. housing market is on the verge of a vicious cycle, which is not good for America, Lennar mortgage head warned. So just to give you guys some context out there, so Lennar is a home builder. They're one of the biggest home builders. They're one of like the big 5 or 6 home builders in the United States. They build a ton of homes, and they have a division of their company that's Lennar Mortgages, which, right, if you build the home and sell the home, you might as well have a company that finances that home too. So this is coming from the head of Lennar Mortgage. And we're going to read about what she thinks and what she's saying and why she thinks this. So politicians should stop talking about affordability and start delivering on affordability, Laura Escobar says. And man, if there wasn't, if this was a unique situation, right? Like how many times have we felt like, man, the government needs to stop talking about doing something and actually try doing something. Now, I understand that obviously the housing market is extremely, extremely, extremely complex, and it's got some major problems, and they're not easy to solve. So as much as I don't disagree with Ms. Escobar, also too, it's not something where you just snap your fingers and the problem is solved, or create a new law or restrict something, with a new piece of legislation and voila, it's fixed. It's much deeper than that. But she's not wrong. That doesn't mean that she's wrong. So let's continue on. Here you go. Someone's building some Lennar homes there. We're on the verge of a vicious cycle in which fewer and fewer people can afford the American dream of home ownership. That's not good for America. And, it's interesting because this is absolutely true, and we're feeling this. Like even just my own personal experiences. For those that don't know, I'm a real estate agent, and I work in the eastern LA County area. So I'm in a town called Claremont, California, which is about 40 minutes east of LA, 45 minutes east of LA, of course, depending on traffic, right? The old LA thing, depending on traffic. And I have a lot of millennial friends. I'm a millennial myself. I am like smack dab in that millennial kind of generation. And I'll tell you what, a lot of my friends and peers are really discouraged when it comes to owning a house. And while I have had a few friends fortunate enough to be able to purchase a home, many friends haven't been able to, and they're really feeling kind of distraught and left behind by it. And so what we're seeing is we're seeing millennials come up with more creative solutions to get their slice of the American dream. And in fact, I just recorded a new YouTube video on this. I did a live on this subject 2 weeks ago, I think. I can't remember. But, more and more millennials are turning to co-buying to be able to afford a property. And co-buying, simply just means buying a house with someone else. But in the sense of the term, it actually really means buying a house with someone who you're not married to, who's not your spouse, who's not like your direct relative. So co-buying now is kind of what we're seeing is we're seeing millennials co-buy, and we're seeing millennials actually start buying properties with their friends as opposed to renting them, because they're going, hey, it's so expensive. I can't save for a full down payment, but I can save for half a down payment. And then my other friend who also wants to buy a house and build equity and knows all the pros to home ownership, well, they also can't afford a down payment, but they could afford half a down payment. And together we can afford one full down payment. So we're seeing that the younger generations are starting to realize kind of the writing on the wall that is the difficulty of the American dream of home ownership. And they are adapting, right? Necessity is the mother of invention. And that's what we're seeing from a lot of millennials and even some Gen Zers. They're just saying, how can I get my foot into home ownership? I don't want to rent. I don't want to be at the mercy of a landlord. I don't want to be at the mercy of getting kicked out because my landlord wants to sell the property. I want to be able to build wealth and have tax deductions and have a stable living situation where my monthly payment isn't consistently going up all the time. And, the answer to that is co-buying and buying real estate. So the writing is on the wall. And that's one of the reasons I wanted to cover this, because it really does, to me, signify that we are potentially on the cusp of a pretty vicious and brutal housing cycle that we haven't seen before. So that was Laura Escobar, the president of Lennar Mortgage, speaking Monday at the annual Mortgage Bankers Association conference in Denver, Colorado. Escobar, who was recently named chair of the Mortgage Bankers Association, told the trade group's 275,000 members that she would work to bring the issue of housing affordability to the forefront for policymakers and government officials, and would campaign to loosen regulations in mortgage lending and home building. This all sounds really, really good. Kind of three things to hit on this really quick. Three things to hit. Number one, we've heard this song and dance. We've heard the Trump administration talk about how affordable housing is important. We've heard the Harris administration talk about how affordable housing is so important. We heard when Biden was relevant, we heard about Biden talking about how, affordable housing is so important. In a lot of cities at the local level, cities, counties, and states, they're passing ordinances to help stimulate affordable housing. This is nothing new. The fact that she's going to kind of campaign and champion affordable housing, we all know that we need affordable housing. So I don't think we, just need another cheerleader. However, what I will say is one spot that I agree with her with, and she is right, is we do need to loosen the regulations in home building. We need to allow home builders an easier, quicker, faster path to home building. And there will be a lot of people that disagree with me that don't like that. I understand that people don't like when their neighborhood changes. I understand that people get wary of new developments, but this is the day and age that we're in, right? And if we want to solve the affordability crisis, we need some more supply. And the only way we get more supply is if we build. And the quicker we build, the quicker we can gain that supply, the quicker we can alleviate this problem, which will be better for everyone. So unfortunately, that means that, some of our local towns and cities are going to have to change the way that they look a little bit. Now, the question is, how do you balance that change with, holding the character and community of a town, but also expanding it and helping meet some of these affordable housing needs? And that's the difficult part. But at the end of the day, I agree with Ms. Escobar on this, the fact that we do need to loosen regulations for home building. Where I disagree with her is I don't think we need to loosen regulations in mortgage lending. Now, I will say that that's not my world. I'm not a mortgage lender. I don't make loans. I don't give loans. I'm a real estate agent. So the other thing too is I don't know what regulation she's talking about when it comes to mortgage lending. I don't know what she means by that. I definitely think we need to I think right now where the lending standards are quite good. They're kind of strict right now. And that all came as a repercussion and backlash of the 2008 great financial crisis. And that whole financial meltdown had to do with the fact that, we were making horrible, terrible loans to people that they shouldn't have been able to Google the word loan, let alone obtain one. And they were getting a ton of money in the form of loans. So I don't think we need another cheerleader for affordable housing. We've got plenty of those. We all know it's important. I do think we need to loosen regulations on home building. I'm not so confident about loosening regulations on lending because that's what got us into 2008 in the first place. So my take on that. Lennar Mortgage is the financing arm of Lennar, the nation's second largest home builder. Escobar joined the company in 2002. Enough is enough. Escobar's comments echoed much of what the housing industry and particularly builders have been saying for the past few years, that an inventory crunch is pushing up home prices. And yeah, we all know this. This is no doubt. There's no doubt that we have an inventory crunch. This is pretty baked into the entire United States. There are some areas where inventory is popping up and getting a little bit closer to normal, but it's very few and far between. And what we talk about when we say normal inventory, typically we're looking for inventory that is in around the 5 to 6 month region. And the way that we kind of calculate that, whenever you hear someone say, oh, there's 3 months worth of inventory or 2 months worth of inventory or whatever months worth of inventory, basically what that's saying is if no new home buyers came into the market and we had this group, this pool of home buyers, and no new ones came in, we would have enough inventory to be able to sell these homes for the next 2 months or 3 months. And then we would run out, and then the home buyers would be out of luck. So we only have enough housing stock to fulfill right now about 3 to 4 months worth of inventory, which is still typically a seller's market. If we continue to have a seller's market like we have had for the past 4 years, that's how prices continue to go up. So think of it this way: like if you had 1 month of milk on a 1 month of inventory for milk, that would be like it's all on the shelf. And if we had no new milk and no new buyers come in, and we only satisfied the buyers that were looking for milk at the time, we would only be able to sustain that for 1 month, and then we'd be out of inventory, no more inventory. We need to be around 6 months. That's typically what's thought of as like a neutral market, where we're only going to see 1.5 to 2.5% appreciation for real estate year to year, which is normal. We're not going to see these crazy 8 offer scenarios. We're not going to see houses sell for $80K over the asking price, but we're also not going to see houses sell for $50K under the asking price or sit on the market for 120 days. So we really want to get to that 5, and really ideally, we want to get that 6 month region in terms of inventory. And that's when we're going to start to see things kind of head back to normal in terms of home price gains, houses selling, and competition for properties. So there's no doubt that the inventory crunch is pushing home prices up. That's the way that it works, right? It's basic supply and demand, right? Supply and demand 101. We've talked about this a lot on the streams. Housing costs have surged, with prices hitting new highs and the rate on a 30-year mortgage averaging close to 7%. Escobar said that the U.S. is short 1.5 million homes, and the country's housing stock isn't keeping pace with the number of households. And actually, in these 2 sentences, a few things to unpack. Number one, interest rates, right? We've gotten hit. It's been a real roller coaster. It's been a real up and down. We got some relief when it came to interest rates a little bit earlier in this third quarter, and then we kind of lost those gains, unfortunately. And what happened is the Fed announced their 50 basis point rate cut. Mortgage rates dropped nicely. In fact, they were flirting with like 5.99. They never got there, but they were around 6.05, 6.1, which was great. That was kind of a big boost to home buyers and sellers alike. We thought, hey, maybe finally we'll increase affordability a little bit. We'll stimulate buying and selling, and the market will thaw out and loosen up, and we'll get some transactions going again. Unfortunately, the U.S. economy is extremely resilient, and job market's still doing very well. The economy is still growing. Consumers are still spending. Inflation is not quite at that target 2% rate, but it's pretty dang close. And for all of these reasons, for the strong economy that we're seeing, the mortgage interest rates actually went back up. So the federal funds rate did go down. Thank you, Jerome Powell and the Fed. But the bond market kind of reacted positively for bonds, but negatively for mortgages. And investors started to say, hey, you know what? Actually, mortgages, that's not where we want to be. Bonds are the safer investment. They're a better payoff. The 10-year treasury bill went up. We're making more money on bonds. We don't need to buy mortgages, and therefore interest rates went up. So unfortunate in that regard, because we thought we were going to get some relief, and then we really didn't. We are 1.5 million homes short. That seems to be the number. And it's interesting because one of the other points in this sentence is that housing stock isn't keeping pace with the number of households. And yes, a lot of people go, oh, household formation, it's an important metric. And you know what? Household formations are down. Millennials aren't having children, or millennials are waiting longer to have children. They're having less children. The birth rate's dropping. We don't know if Gen Zs are going to be interested in a typical, family. The idea of the nuclear family is not as strong as it once was. And therefore, we don't have as many household formations, and therefore demand could weaken for houses. But what we're not taking into account is we have things like large numbers of immigration, and households are still being formed. And maybe they're not being formed at the same rate or in the same way that they were in the previous decades, but they're still being formed. And at the end of the day, people still need a place to live. So I'm glad that Ms. Escobar brought that up, because we still have new households being formed and they need to live somewhere. And we're unable to keep up with that demand. Decades of overregulation have made it increasingly difficult to build new homes and rehabilitate old ones, Escobar said, according to prepared remarks. For many small builders, it's now close to impossible. And as fewer new homes come on the market, the cost of other homes rises even faster. And this really, it's true. What we're seeing is we're seeing that the small home builders, the home builders that maybe are only going to build 3 or 4 houses on a given parcel of land, they're having a really, really hard time. They're having a really hard go. They're having to compete against these mega builders, your D.R. Horton, your Lennar, KB Homes, Toll Brothers, fill in the blank with whatever you like. And unfortunately, what that's doing is that's slowing down America's housing unit recovery, because instead of having a lot of different builders building a wide variety of types of properties, sizes of properties, price points, and in a wide area of places, we are now seeing less and less of that, and we're relying on kind of the big 4 or 5 builders, and that's definitely becoming a problem. And that's one thing that is aiding to the inventory shortage. Okay, let's see, where were we? Oh, she also pointed to zoning rules that make it difficult to build more housing in many parts of the country. About 75% of residential land in the US is zoned for single-family homes, she said. Government regulations add nearly $94,000 on average to the price of a new home, according to a 2021 study from the National Association of Home Builders. So when you factor in the price of land, the government regulation cost, which in this case is on average $94,000, and then you factor in materials and labor, how is anyone ever supposed to build a house that costs $175,000? I mean, you're already in at almost $100,000 just in government regulations, right? And it doesn't even count the land that you have to buy and the materials and the labor that you need to build the house. And this is one of the big problems. We need to make it more affordable for builders to build so they can make more affordable products that people can buy. And we're just not doing a great job in facilitating that. Things are changing a little bit, but it's, when it comes to housing, and with a lot of things that have to do with the markets, financial markets, the economy, when there's issues, fast changes almost never exist, right? Think of it like a cruise ship that is on the open ocean, right? And they need to hang a right turn. How long does it take for a boat to make a right turn, a giant cruise ship to make it takes a long, long time. How long does it take for a cruise ship to accelerate or to stop? It takes a long, long time. And that's the same thing that happens with the United States economy. There's no quick fixes. Whenever there's a solution, it's like trying to turn a cruise ship. It just takes a lot of time to see the repercussions of those changes and modifications, whether that's legislatively or, economic policy wise, interest rate cuts, it doesn't matter. So we have to keep that in mind. But there you go, $94,000 just in government regulations. That's going to be tough to make an affordable home, right? I mean, that's like say, hey, build a car for $20,000, but the engine alone is going to cost 10. Okay, well, it's going to be very difficult to sell that car for $20K when one component costs half that amount. So, and then the other issue here is zoning, right? Zoning is really, really important. And 75% of residential land in the US is zoned for residential. Now, it doesn't say what type of residential, and that's important. Now, it does say zoned for single family homes, but that could be single family attached homes or, other different varying sort of products that fall in that range. But what we need to do is we need to start rezoning for higher density because we have limited land, especially in our coveted urban and suburban areas. Out in the more rural areas, in the rural states, then single family homes potentially could be viable still because there's more space and land and it's going to be cheaper. But Take my region, for example, in the greater Los Angeles area, there's no vacant lots. There's no place left to build. And if there is a vacant lot, it's vacant for a reason. It's, on a hillside, or doesn't have utilities, or, whatever the reason may be. So one of the things that we're looking at changing, or should be looking at changing rather, is the zoning, right? We need to get away from the idea that single family housing is the only option. And is it a good option? Yes, it's a great option. It's one good flavor, but it's not the only flavor. I mean, imagine walking into an ice cream store and they have 50 flavors of ice cream, but 40 of them are different types of chocolate. You'd be like, okay, well, what about anything else, right? And that variety is important because we're running out of room. We need to have multifamily housing, and we need to raise our density so that we can get more units in the same given space. Because if we could build 4 houses where we could build one single family home, well, that's 3 other families and 3 other buyers that are able to live on that same plot where traditionally only one family or one person could live. Therefore, we're going to have more product, more inventory, and hopefully more affordable pricing. I know that, multifamily is sometimes not looked at as being desirable, but, what do you guys think? Do you guys think that the U.S. should kind of shift away from single family homes? Do you think that we should start building more multifamily and high density types of residential products in our communities? How would you feel, for example, if in your neighborhood a 32 unit condo development went up in what is traditionally a single family home? Drop a comment and let me know what you think about high density housing and if it's needed or not. The costs of labor and building materials have increased by 31% since the beginning of the COVID pandemic, she added. Yeah, yikes, inflation. Escobar said she would be bringing the matter to lawmakers and regulators in an effort to lower the cost of housing, particularly by boosting inventory. Okay, good. Hope she does it. Enough is enough, she said. My message to every policymaker in Washington, D.C. is going to be simple. Stop talking about affordability and start delivering on affordability. So just kind of interesting to see that home builders are also aware. I mean, obviously it's a little bit self-serving. Of course, they want to have looser restrictions on lending and looser restrictions on building because then they can build more products and make more loans and make more money. But it doesn't necessarily mean that they're incorrect or they're self-serving, because they're not wrong. We do need more homes and we need to increase our inventory somehow. And one of the best ways of doing that is loosening regulations. So the next article I want to go over, it's a little bit of a counterpoint to this article, right? So, but not directly. So you think to yourself, okay, the housing market's on the verge of this vicious cycle. We've got terrible inventory. We've got high prices. We've got interest rates that just crept up over the last 2 to 3 weeks. Nobody is buying houses, right? Wrong. You're wrong. The demand is still actually quite high. And here's an article from Redfin about, and again, this is just 6 days ago, home buying demand holds up even as election uncertainty, stronger than expected economy push up rates. So again, like I was talking about in the last thing, we've had, a couple roadblocks, a little bump, a couple bumps, little speed bumps in the housing market over the last couple of weeks, one of which is the election and one of which is the strong economy figures pushing up rates. And you might think, well, how does an election affect people? It's the strangest thing. I've been through a couple election cycles as a real estate agent, and it's absolutely true. People are focused on what's going to happen with the country, what administration is going to take over, will that administration change rules and laws, and how will it affect housing, economy, and finances. And a lot of people just, they don't want to make any major decisions. On top of that, we're heading into November, and November, December are historically a pretty quiet time for home buying. So a lot of people just say, you know what, I'm going to pull back. I'm going to wait till after this election nonsense gets figured out. And it really doesn't matter about who wins or what happens when it comes to, the influence that it has on people's decision making. I think people just want to know, right? They don't care who, they just want to know who it is and how might that affect me. So, I get it. Obviously it's a big deal and it's important, but it's interesting to see how despite those things, home buying demand still holds up. So let's see what our friends at Redfin have to say. I'm trying to make this as big as possible here. I think that's pretty readable, right? Right. Pending sales and home tours remain fairly strong as mortgage rates rise to their highest level since midsummer and uncertainty around the election picks up. Pending U.S. home sales rose 3.5% year over year during the 4 weeks ending October 20th, the biggest increase in 3 years, with the exception of the prior 4-week period when they rose 3.7%. On a local level, pending sales are up in 35 of the 50 most populous U.S. metros, the most in 3 years. So kind of interesting that 35 out of the 50 most popular metros are seeing an increase in pending sales. And that's important because that's not just properties coming onto the market. That's actually homes that are actually selling. They're going under contract or opening escrow. And 15 to 20% of those will probably fall out just because that seems to be sort of the statistic of homes that don't actually make it successfully through escrow, but still it's a pretty large number. And when you think about some of the negative issues that we're facing right now with interest rates and election uncertainty and inventory crunch, that's pretty dang good. I think that's actually a pretty good. Demand is also holding up at earlier stages of the home buying process. Redfin's Homebuyer Demand Index, a measure of tours and other buying services from Redfin agents, hit its highest level since May and is up 3% year over year. And that's very interesting, that the fact that, now it's this obviously this information is going to be delayed a little bit, but they're talking about still post summer. So this is now into the fall, and for it to be up at its highest level since May, that's pretty impressive. The fact that June, July, August, even September didn't beat it. Redfin economists say pending sales and home tours are performing surprisingly well in the face of high housing costs and uncertainty surrounding the upcoming election. Chen Zhao, Redfin's economic research lead, said she would expect a bigger drop-off in home buying demand given how much mortgage rates have increased in the last few weeks. And quite honestly, between mortgage rates and the time of year, seasonality in real estate, I would have agreed. I'm surprised. I thought there would have been a drop-off as well, but there hasn't. It's been the opposite. This week, average mortgage rate is 6.44%, up from a 2-year low of 6.08% at the end of September. And the daily average is 6.92%, its highest level since July. And this is also interesting too, because, if you look, right, like these two numbers, when it comes to interest rates, for all intents and purposes, let's just say it's 1%. It's not quite, right? It's closer to 0.8, but let's just say it's 1%. We're talking about 6.0 to 6.9. That's a huge increase. And for buyers to say, hey, you know what? It's not good, but I'm not unfazed by that increase. And we're still going to continue to request to look at homes. We're still going to put offers in on properties, and we're still going to have an increase in pending transactions. Wow, that's interesting information. Election uncertainty, stronger than expected economy are pushing mortgage rates up. Mortgage rates are jumping because investors' expectations of the impending election are shifting, and because the most recent jobs and inflation reports showed the economy is a bit stronger than expected. Remember, when the economy does good, rates go up. When the economy is not doing as well, rates go down. And very quickly, the reasoning for that is when the economy is hot, it's churning along, people are spending money, people are buying, people are selling, we've got good GDP, all that stuff. Well, then we want to make money a little bit more expensive because raising interest rates is a way to kind of pump the brakes on the economy. After all, we don't want the economy to get too hot. We don't want it to get too crazy because that we can have some unsavory side effects of that. And when the economy gets too bad and we start to see unemployment rates go up, people aren't working, people aren't spending, businesses are laying off, then we lower interest rates. And that makes money cheaper so that hopefully people will take out loans, mainly businesses. Businesses will take out loans, open up new locations, hire more people, get the unemployment rate lower, get more people working, more people have money so they can start spending again. Investors in the bond market are particularly worried about the possibility of increased government debt after the election, Zhao said. They're concerned that one party could end up controlling both the White House and Congress, which would increase government spending more. The concern, along with strong economic data, is pushing up 10-year Treasury yields and mortgage rates. And that's what I was talking about. The 10-year Treasury yield is going up, and therefore mortgage rates are going up. When 10-year Treasury yields go down, it means investors go, oh, you know what, these bonds, they're not quite as profitable as I would like. So I'm going to get into something else that's profitable but also stable, which is mortgage-backed securities, MBSs, and they instead buy mortgages. And when more people want to buy mortgages, there's competition for your mortgage. And when there's competition, they lower their prices. They lower that interest rate to try to entice you to get your loan from them. And that's when we see rates come down. High mortgage rates have pushed monthly housing payments near the highest level since July. Rising rates and stubbornly high home prices have pushed the median U.S. monthly housing payment to $2,587, the highest level since July. Except for the prior 4-week period when the median payment was $2,591. Cash buyers may be propping up home sales. Mortgage purchase applications fell 5% in the last week, dropping near their lowest level in a year, even as spending and sales and early stage demand hold up. So interesting in kind of that, right? 1 second, my computer kind of went funky on me. Here we go. And that is interesting, the cash, that could be one reason that we have lower mortgage rates, but higher pending sales is that those cash buyers are propping things up. And quite frankly, it's not weird to think that, mortgage applications and new mortgage and purchase applications fell 5% because interest rates did go up. It's going to turn buyers off a little bit. On the selling side, new listings of homes for sale are up 2.2% annually, one of the smallest increases in the year. There are buyers out there, especially for homes in desirable locations with highly rated schools and counties with low taxes, said Sherry Mosteller, a Redfin Premier agent in Atlanta. But more buyers are negotiating on price, asking for concessions and money towards closing costs. On my listings, I'm seeing a trend of buyers asking for minor repairs and or cosmetic items. Many are getting creative with different types of mortgages, opting for an adjustable rate or a shorter loan period. That said, a fair amount of folks, both buyers and sellers, are waiting on the sidelines until after the election because they feel a lot of uncertainty in the housing market. And so, it's kind of interesting. It'll be very interesting to see what happens in the next 4 to 6 months in the housing market, because we're going to get past the elections. It does still seem like the Fed is going to cut rates again at some point in November. We don't know when, and we don't know for sure, obviously. And it'll be interesting how that federal funds rate cut could potentially affect mortgages. How will the mortgage rate be affected once the election is over? We see a lot of investors are kind of cautiously waiting to see what party wins so that we can get a better idea of financial policy. I think, of course, depending on what happens with the election and over the holidays and things like that, I think there's a very real possibility that March rolls around and April rolls around, and we've had a couple of rate cuts from the Fed. We're done with the holidays. We're done with the depths of winter. We're starting to come out into the spring a little bit. If mortgage rates go down because the economy settles a little bit, I definitely see the possibility of having a spring and summer of 2025 that is pretty wild again. We thought that was going to happen in 2024, and it simply didn't, because interest rates stayed on the higher side and inventory didn't really pop up. But there's only so long that people can put off buying and selling. There's only so long that you can go and not buy or sell a house. For instance, their families will get larger, their families will get smaller, families will dissolve, divorces will happen. People will need to relocate for work. And there's 4 reasons right there that those are major life events that don't really particularly care what the inventory situation is like, what the market is doing, what interest rates are like, or what the affordability levels are, right? If you have no kids in 2020, and by 2025, all of a sudden you have 2 kids with a third on the way, chances are you're going to need a new house and you're going to need something larger. So I could certainly see that 2025 spring and summer season could be crazy. Now, if the election goes a certain way and investors feel like the national debt is going to be a problem, and if we feel like we don't get the inventory that we need and interest rates don't cooperate, we might see another repeat of 2024. Of course, nobody knows, right? And so if somebody tells you that they do know, or if somebody acts like they do know what's going to happen, chances are they are a very uneducated and foolish real estate professional, because they should never be trying to anticipate, right? We can make these guesses. We can look at the data and we can kind of infer what we think might happen. But at the end of the day, we don't know what's going to happen. So if you're ever talking to a real estate professional and they're talking from a place of this will happen, watch, wait for it, I know this is going to happen, they better either have some super, super good inside information from a very high level source in the government, or they don't know, they're not telling the truth, or they're just puffing a little bit. And none of that is certainly good. It's just kind of interesting to recap that, the U.S. housing market is in a very interesting spot. It's been in an interesting spot for some time now, and it continues to be kind of stuck in this interesting spot. But given the fact that we are sort of on the verge of this potentially new vicious cycle where, Americans can't afford to buy houses, especially younger generations can't afford to buy houses and build that wealth, yet we still have very high home buying demand. And I can tell you just locally, anecdotally, what we've seen is, houses are not staying on the market. In fact, I'm gonna pull up our friend at Zillow really quick. I'm just gonna show you one quick thing. And what we're seeing is that essentially houses are not really staying on the market very long. Now, I don't know what area you are in. Obviously, I can only tell you about the area that I'm in, but I'm going to bring up a map of Claremont, California. And we're going to do here. Let's do this. All right. Y'all can see Zillow now. There we are. And so let's do this. Let's look at listings. So right now in Claremont, if we just look at okay, so given this area, this is actually better. This is a wider range. So let me zoom out just to give you guys an idea. Here's Los Angeles. This is LA. This is San Bernardino. Pasadena's right here. So this is downtown LA right here. I'm here in Claremont, which, like I said, is about 40 miles east of downtown Los Angeles. So in this picture right here, all of these red pins are homes for sale. And there's no filters. These are just homes for sale in this area. This is mostly my area. This is the area that I work. This is the area that I cover. This is what I read about and listen to all day, every day when it comes to what my job is. And if we put on a filter for homes on the market, 30 days, apply, you're going to see that very few bubbles went away, which means that there are very few homes on the market more than 30 days. And if you just kind of go through and look at these, and let's just scroll in and let's go to Claremont, and it's going to tell us exactly what the days on market are, right? So here's one right here. This one, actually, I know this one's been on the market for a little while. I don't know what the exact days are. So this has been on for 68 days. This is an outlier, and there's a couple problems with this unit. Really quick, this is verging on overpriced turkey. It had a almost a $45,000 price cut earlier this month. This is listed by agents that probably, well, I know that they don't have a great understanding of what's going on, but like, just look at these photos. Like, this is not helping out anything, right? Like, this is terrible. Like, this is all crooked. And why is there even a picture of this gate? Like, what does that do? It's all messed up. The interior is super dated. This is on the verge of an OPT. For my people that watched a couple of streams ago, we talked about OPTs, overpriced turkeys in real estate. So this is an OPT. This is an outlier. Let's this home, this has been on the market for 2 days, and it'll probably sell. It's a really nice home. I'm familiar with that one. If we go to properties that sold, and we'll apply, these are all the properties that have sold. Most of these are all under 30 days. So it's just kind of interesting to see that even given, where things are at now, right? And the climate that we're in, there still seems to be quite a bit of demand for people that want to buy houses. So, when I saw that we're on the verge of a vicious cycle, I wanted to dive into that because I wanted to see what that was all about. And it's just very interesting to see where we actually are and where things could go. So I know tonight was a little bit of a shorter stream. Thanks everyone for hanging out. I appreciate you guys watching and tuning in. And for those of you watching on the replay, thanks for checking it out. If you guys need any help with anything real estate related, don't hesitate to reach out to me. I'll put a pinned comment below where you can reach out to me and you can connect with me. Whether or not you're looking to buy or sell in the greater Los Angeles area, San Gabriel Valley, or anywhere else in the United States, I have a huge group of really competent referral agents. So if you're looking to buy or sell anywhere in the United States, I can find a great real estate agent for you that's going to do a great job, that's going to be competent, that's going to be able to help you achieve the best results. So if you need any help with real estate or real estate related questions, you can either drop a comment, or after the stream's over, I'll pin a comment with my contact info. It'll also be in the description as well. And you can reach out to me and we'll have a chat. I hope you guys enjoy the rest of your week. If you're watching the baseball games, or watching the World Series, I hope your team wins, whatever team that is. And I'll be back next Wednesday at 6:30 for another great stream. I hope to see you here. Have a good evening. Have a good week. I'll see you next time. Bye.